Welcome, welcome. Thank you all for joining us this evening, this afternoon. Welcome to the Money Matters Mondays podcast, where we talk about everything finances, financial things and money management, financial literacy, financial education, anything as it relates to money and managing your finances in a better way is what we're going to be discussing during these podcasts. My name is Richard Richardson. I'm CEO of Eternal Equity Investments. Also part of the Generational Wealth Builders of Alabama group. I'm actually coming to you from my office here in Decatur, Alabama. We are just a financial services company where our goal is to just educate people on how to save, grow, and make money. Different avenues. Talk about debt management. We talk about retirement planning, other ways for your money to grow. We also talk about the power of life insurance and how it can be used in many ways to create generational wealth. How the wealthy have been using it for years to create generational wealth. So last week we talked to you all about budgeting, the importance of budgeting, creating a plan. That was our topic on last week, and hopefully you all got some good information out of that. Today, since we do deal a lot with life insurance, we're actually going to talk about life insurance today, why it's necessary, why it's important, that everyone gets covered, the benefits of it, how you can use it to create generational wealth. We're also going to talk about changing people's paradigm and changing people's mindset about life insurance, because I know for a lot of people they think life insurance is just something that when you die you leave somebody some money, but it's much more than that. Has many more advantages than that. You can actually use a lot of it while you're still living, and in certain situations. So we're just going to delve into that, and hopefully you all just take the time to gather the information, and hopefully this information you'll find beneficial to you. So we'll just talk about why life insurance matters, why it's important. First and foremost, it's financial protection for your dependents. If you are an adult that has kids or anybody who depends on you financially, should something happen to you, what are they going to do? They've lost your income that they depended on for their needs and necessities, regardless of what it might be. And so, what happens, when they lose that income? I mean, do you want to put them in that situation where they have to beg, borrow, and steal to survive? And we see many GoFundmes, that are on the internet or through social media, to where people can't even afford to bury their loved ones because they were left with nothing. And then they, on top of the cost of burial, they're left with the bills that they might have left. Or say you pass away and you still owe a mortgage, and your family can't maintain that mortgage. What are they going to do in that situation? So first and foremost, it's about financial protection for your dependents. It can be used for future planning, estate planning, education, because we're going to talk about how you can earn cash value on certain types of permanent life insurance policies. And then you can use that cash value, as it grows. You can borrow against it, take withdrawals against it. So we're going to go into the details of that as well. Estate planning and taxes. A lot of people don't realize the tax implications, not just in retirement, but also when you pass away. How, if your money and the things that you're leaving is in like 401ks or IRAs or stocks or bonds and things of that nature, well, your dependents are going to be taxed on that money. Life insurance beneficiaries have protections against, the money that they receive as a result of life insurance payout. And then again, it's just peace of mind. I know for myself, I have a beautiful family, wife, kids, grandkids. I just want to make sure that if something happens to me, that they're protected, that they can still continue living the life that they're living now. Financially, don't have to sell assets to continue their standard of living. So I just want to make sure they're protected. So that gives me peace of mind and confidence knowing that I'm looking out for their best interests. So how does life insurance work? There's a contract. You, the policyholder, enter into a contract with the insurance company, and then there's certain premiums that you pay to keep that policy into effect. You select beneficiaries who, if something happens to you, they will receive the payout. That you've chose. Based on what you negotiated with the life insurance company, and then there's a death benefit that your beneficiaries will receive. And life insurance in general, it's about transferring risk. Again, you're transferring the risk. If something happened to you, you're transferring that risk to the life insurance company, and that's true for any type of insurance. Auto insurance, health insurance, it's basically about transferring risk to the life insurance company so that in the event, say something happened to you, whether it's life insurance, auto insurance, something happens to you, instead of you now having to come up with that lump sum of money to pay for, a new car, something happens to your as far as you passing away, coming up with a lump sum of money. Now that onus is on the insurance company to be able to provide that. Um, and so it's very beneficial. It's about reducing the risk on yourself, transferring that to the insurance company while you're paying a much smaller premium. So that's really the benefits of it. Now, we'll talk about the different types of life insurance. There's primarily three different type of life insurance plans, regardless of which life insurance company you go to. I mean, whether you go to Allstate, or State, it doesn't matter which life insurance company you go to. There's really only three different types of policy that you're going to be able to get. One is a term policy, and it's by its definition it is a temporary policy. It can go from 15, 20, 25, 30 years, and it's typically in all cases it's going to be the policy that you're going to have the lowest premium on, and going to get the highest death benefit. So that's why a lot of people are attracted to that because they're paying a low amount up front, in their premiums and their monthly premiums, and they got a high death benefit. But what are some of the drawbacks of it? One of the drawbacks, the primary drawback is it's temporary. Meaning, if you get it, say you get a 20-year term, you've lived 20 years, you got it when you was 20, now you're 40 years old, that term is expiring. Now you got to go and get you another insurance policy. Normally, what happens over that time, you encounter health issues, you're 20 years older, and so now the cost to go back and get another life insurance policy is going to be astronomical compared to what you were paying before. So that's some of the drawbacks, and people take that risk. But also, if you just Google how many people outlive their term life insurance policy, the number's over 97%. So the numbers say that only roughly around 3% of people who get a term life insurance policy actually use it. The other 97% paid over that time and really got no benefit out of it, wasn't able to use it. And so that's really one of the big drawbacks, really. And so you've lost that money. You paid in 20 years on the life insurance policy. It lapsed. That time is over, and now you may not be able to afford, the new premiums. So you run into all those difficulties, and so that's one of the primary drawbacks with term life insurance policy. Also, one of the other drawbacks is it doesn't earn cash value. So that money that you spend into it is just gone. There's no cash value that you was generating as a part of that you will with the other two types of life insurance policies. And so again, those are just things to be aware of when you go looking for life insurance. That's just something that you need to be cognizant of. The other type of life insurance policy is called whole life insurance, and it is a permanent life insurance policy that earns cash value. Um, Ideally, it never expires. However, it does depend on the amount that you're paying in premiums. A lot of people don't realize that there are different levels of premium because it does have some fluctuate, some flexibility in the premiums that you're paying. So you gotta be sure that you're paying the right amount of premium to make it a permanent policy. And as you're paying in that premium, as you're paying your premium, a certain percentage of that goes into a cash value account that actually earns interest over time, and you're able to actually borrow that money or withdraw that money. However, one of the differences between that and the next one we're going to talk about is when you withdraw money or you take out a loan or withdraw from the cash value that you earn in your whole life policy, that amount, say should something happen to you prior to you paying it back, or if you take a withdrawal from it, it actually decreases your death benefit. So if you originally took out a whole life policy with a $500,000 death benefit, and you took out $100,000 loan, and something happens to you before you pay the loan back, your death benefit, your beneficiaries are going to receive $400,000 instead of the $500,000. However, for individuals who are seeking, lifelong coverage, permanent coverage, you want to lock in now. whole life, it is an option. And it does have, its advantages and disadvantages as well. The next one I want to talk about, and the one that a lot of people, aren't aware of and haven't heard of, because there's, again, we are a part of what we do is life insurance, and we educate people on the power of it. And so, a lot of our clients, when we present to them the Index Universal Life policies, there's something they haven't heard of. And so we try to provide them information. And so we really concentrate a lot on making sure people understand and are educated on the power that are in IULs. So it's similar to the whole life, and that is a permanent policy, but it offers much more flexibility than the whole life, and it has a greater potential for cash value accumulation. So part of its key features is the flexible premiums. It allows you to adjust payments within limits, after your initial payment, because you can overfund it. You can throw more money in there. That way, your cash value is growing quicker. In times where you have some financial hardships, you can actually use your cash value to pay your premiums, or you can lower your premium during certain times, um, as long as you haven't fallen below a certain threshold. So it has cash value growth and the cash value grows based on an index that is being tracked, by a life insurance company. However, one of the great benefits of it is that once you sign up for Index Universal Life policy, you select your index strategy with that particular life insurance company that you want to use to be able to determine the amount of interest credited to that account. And then when those at the end of a certain period, they look at those indexes to see how they perform. If they've gained, if they've grown in interest, say they've grown by 10, 11, 12%, that amount is credited to your cash value account. But here's the great thing. Here's the kicker. If it performs negatively, if it lost 10% or 11% or 12%, you have a guaranteed 0% floor, meaning you don't lose any money because your cash value account is not actually in the variable market. They're only just using those indexes to determine how much interest is credited to your account. And this is one of the very few uh, avenues where I know you are truly earning compound interest on that money. The variable market cannot guarantee that because in down years you're actually losing money. Just think, how much money have people lost in their 401ks since the beginning of January of 2025 because of the market fluctuations. I know the market itself has been down, since the beginning of the year, and so you don't have to worry about that problem if you've overfunded, your Index Universal Life policy. You still have all the same life insurance benefits that you would have with the other two. All of the policies, like I know the companies that we deal with, all of the policies that we deal with also come with another feature, a feature called living benefits or accelerated benefits. And that's where you're actually able to use your policy before you pass away. For example, if you incur a critical, chronic, or terminal illness, you're actually able to access portions of your death benefit to help you through those times. I know a lot of people have cancer policy, through their job or elsewhere through supplemental insurance companies like Aflac and others, where they offer certain supplemental insurance, specific for cancer. So if you contact cancer, you get several, certain benefits from it. Well, all the policies that we deal with come with that included. So you don't have to have that separate cancer policy or whatever else it may be, a stroke policy or whatever other supplemental policy that you may have. They come with your life insurance policy. So, for example, if I, contacted cancer, I had to take off work, I'm losing that income. My wife has to take off work, and so she's losing income too. But we have $1 million life insurance policy there. I can get up to $800,000 to help us through that time. So it's all about why wait till I die. Life insurance is not just about waiting until you die and leaving someone some money. Um, so now let's go about, choosing the right policy. You got to look at what are your financial needs. How much of a house you or how much do you want to be able to leave your beneficiaries, should something happen to you. Because there's ways to calculate, how much life insurance you need. And so we help our clients with that as well. We try to help them figure out, based on their current financial situation, based on their family size, how much life insurance do you need? For example, if you're a family with young kids and and you're a young father and you have kids, you want to be able, if something happens to you in the near term, you want to make sure that your kids' college expenses are taken care of, their future expenses, at least until they're, in and out of college. So, you want to make sure you have enough life insurance to cover those needs. Or if you just bought a new home, you want to make sure that that your life insurance helps you cover those needs. Your income is taken into account as well. Based on most people don't want to reduce their lifestyle or standard of living when they retire, or should something happen to them. So you got to take all those things into account. And unfortunately, here at Generation GWB Bama and Eternal Equity Investments, we help our clients, figure those things out and come up with those numbers. So that's important. Um, but then you also got to know your budget. Unfortunately, we're not all, even though we may have these needs, and this is how much insurance I might need. My budget may not be able to afford it right now. So, we help people make sure we help people get the most amount of coverage that they can get based on their financial budget and what they're able to afford right now. Then you got to look at, do you want a term versus permanent? Now, I encourage everyone at a minimum have you a permanent policy. I would not encourage anyone to wear a temporary or term policy as your primary policy. So I would encourage everyone, if you're going out there looking for insurance and you don't have a permanent policy yet, I encourage you to get one. Why do I say that? Primarily because the two primary factors in determining the amount of premium you're going to pay is age and health. There are other circumstances that factor in, but those are the two primary factors that factor into the amount of premium that you're going to pay. And what can we say for certain? We're not getting younger. So every day, the cost of insurance is going up. So, again, in that earlier example that I gave, if you get that term policy for 20 years, if you live 21 years, then that was not, the right decision to have that term policy. So, if you get a permanent policy, get it as early and as soon as possible because the cost of insurance is only going to go up. So that's why I say lock in a permanent policy now. We have a permanent policy on all of our grandkids. We locked them in early. Their premiums are never going to go up. They're between the ages of 6 and 12 now. When they're 60 years old, their premium is still going to be the same. So we've locked them in at a low premium, and then over all of those years, they're still earning cash value at the same time. So not only have we locked them into a low premium that we're paying based on their ages of 8 and not based on their ages of 40 and 50, that we've also started that cash value accumulation over time as well. And so, and so part of what our strategy is, we're using that to save for their college expenses. Again, how many of you all knew that you can use your life insurance policy to pay for any expense, like a cash value policy to pay for any expense that you desire? And when you take out a policy loan, you go and pay college expenses, and while you're paying that loan back, you're paying yourself back. How great a concept is that? The rich have been using this for years. If you just take time to Google the rich man's role, it's where people use cash value life insurance policies basically to act as their own bank. Ray Kroc, the originator of McDonald's. You can just Google it for yourself. It's public knowledge. Use the cash value out of his life insurance policy to do some growth for McDonald's when the banks denied him. Walt Disney, the inventor of Walt Disney World, did the same thing when he was building Disneyland. Took money out of his cash value life insurance policy, went and did what he needed to do, paid himself back, so he acted as his own bank when the banks denied him. And so these type policies give you that type of flexibility to be able to grow your wealth, use that wealth, and while it's still growing and paying yourself back in the interim. And I just think it's just a great concept, and you're actually able to overfund it. And that's not even to mention on the tax advantage that you get with life insurance policies as opposed to some other vehicles that are available to us to be able to grow our wealth. So, again, we talk about generational wealth. This is one of a great way to be able to create generational wealth. Again, the wealthy have been doing it for years. If you have time, Google Rockefeller waterfall method. Again, that's a the generational wealth strategy where they're using permanent cash value life insurance policies to be able to create, not just create, but to be able to maintain that generational wealth. So it's more than just a death benefit. That's really the point that we're trying to drive home is that life insurance is more than just a death benefit. It's more than just about, leaving something behind when you pass away. It has lifelong benefits that begin now and extend even beyond your death to your children's children. I think it's in Proverbs where it says a good man leaves an inheritance for his children's children. And so I feel, for me being a husband and a father and a grandfather, it's part of my responsibility to be able to do those things for myself and my family. But it also we're able to use these products and services that we offer even now. So we just like to educate the community because I know as I've talked to people, as I've done seminars, as I've gone into homes and talk about some of these things that I've just shared with you. I see the fact that people aren't aware of some of these things. They haven't been taught that. I haven't known it all my life. So as I started learning about it and got into this business to be able to help people and help families, as I learned more, I realized that I had to share this information, especially with the community, so that we can help families, build lasting legacies for themselves and their family, and help them build generational wealth for themselves. So again, if you don't have insurance, I recommend that you get it. If you need advice on the different strategies or the different options out there, please feel free to contact me or anyone in our generational wealth building offices. And we would be more than happy to help you navigate through the insurance world. Because again, it is important. It is a vital importance. But one thing I know for sure, there is one thing that is guaranteed on this earth that all of us have an expiration date. So life insurance is something that I guarantee everyone is going to use and need at some point in time. That's one thing that we know for sure. And so it's better to be protected and it's better to start as early as possible to reduce the cost on yourselves and your families in the insurance world. I really thank you for your time. I really hope that something that was shared today was informational for you. And again, tune in next week where we're going to be talking about debt management. Proper ways to handle debt, good and bad debt, and all the things that surrounds that, and how to stay out of negative debt. So again, Richard Richardson with Eternal Equity Investments and Generational Wealth Builders of Alabama. Until next time, thank you all for your time.